Good evening, everybody, and welcome to tonight's meeting of Hammersmith and Fulham Council's Pension Fund Subcommittee. I'm Councillor Ian Cassidy, I'm the chair of the committee. Just welcome everybody who's joining us here tonight in this meeting, and also anybody who's watching via the Council's YouTube channel. Just to remind everybody of the usual well-worn housekeeping, councillors and members of the committee, obviously if you keep your cameras on if possible, so everyone can see our beautiful faces, unless of course you're having any connection issues or anything like this. Usual sort of information in terms of, raise a virtual hand if you want to speak, and please wait until you're called before speaking. For officers and guests in the meeting, obviously cameras on if possible when you're speaking, and please, if everyone can introduce themselves, just for the benefit of members of the committee, but also for the benefit of everybody watching on YouTube. There's a very, very packed agenda tonight. So I think if we can just make sure from anybody presenting or talking any of the reports in terms of guests and officers, obviously if you can be as brief and precise as possible, and I'm sure I can trust all the committee members to ask concise and incisive questions. And I'm sure everybody has read everything comprehensively, so I think we can take a lot of the information as read. Apologies for absence. We don't have any apologies for absence. So what to do now, we'll just go into a roll call and declarations of interest. So I'll do a roll call just to confirm all the members of the committee in attendance. When I call out your name, if you just want to say present and note any declarations of interest. Mike Adam.
Present.
Councillor Caleb Landy.
Present, and to declare a declaration of interest that my wife works in Deloitte in the financial services part, and so I need to make people aware of that and can't be part of the decision to appoint Deloitte. Okay,
that's fine. I think just to check, are you going to stay in for the decision, or will you be kind of disconnecting for that section?
I will stay in, but I won't comment, and I will not vote.
Okay, no, that's fine. Councillor Ree.
Present.
And Councillor Thorley.
Present, Chair.
Thank you very much. Just from cast our minds back to the 3rd of February, do we have any comments in the minutes, or are we all happy to approve them? I'll take that as an agreement. So we'll move on to the first item, item number 4, the independent review of the governance arrangements for the pension fund. So we have John Raisin here as a guest to speak on this, but we've also, if I ask Phil Triggs just for a brief introduction, and then we can get into this item.
Thank you, Chair. So the review arises from a review that was held, it's a separate review, held last year, and that was into the future of the tri-borough arrangement. And the decision of the council was to continue as before with the tri-borough approach to treasury and pensions. But one of the recommendations of that review was that a further review be carried out on the governance of the pension fund. So John Raisin was commissioned to carry out this review, which he started in the second half of last year. John is ex-Section 151 of the London Borough and has extensive experience in advising on governance of LGPS funds, acting as chair of various pension boards up and down the country. So is very well qualified to carry out the review. This review was presented to the authority late last year, and it's the committee's task now to consider the recommendations. The review itself is very extensive. There are 32 recommendations, and officers have addressed each one in the accompanying officer report. But very happy now to pass over to John to make his presentation.
Hi there, do we have John?
Can you hear me, Chair?
Yes, no, there we go.
John, just before you start, we should say that in terms of the status of this meeting as it is currently, it is open presentation, so we're not in exempt, even though we are considering an exempt report, because this is report started in part 2. So I'm wondering if you can just make your presentation with that specific.
With that in mind.
Yeah.
Okay. Thank you, Chair. First of all, I'd like to thank the committee for inviting me tonight. I'd also like to thank the officer for their careful and considered response to the recommendations of the report as detailed in their covering report. In undertaking the review, I did seek to be as thorough as possible, and I've considered very carefully the papers looked at and considered by the committee back to its foundation in January 2015. That's included both exempt and open papers, and I've also been given access to various other papers. As summarised on page 2 of the report, I covered the governance review in 11 themes, and the total size of this review is 23,000 words. I'll just read the conclusion, because I think even though we're in open session, I'll read the really pertinent part of the conclusion, because I think it is important, and there is no reason why it shouldn't be revealed in open. And I'll quote now. It says, overall, this review concludes that the Pension Fund Subcommittee has, since 2015, exercised careful and considered oversight, governance and positive decision-making in respect to the London Borough of Hammersmith and Fulham Pension Fund based on information provided to it. The members of the Pension Fund Subcommittee have, on the basis of the evidence examined, sought to discharge their responsibilities diligently. So that's the conclusion of the report. As members will have observed, there's an awful lot of detail in there, and I have covered a lot of issues. But at this point, that's really all I'd like to say. The officer covering report is there. I'm happy to answer members' questions.
Thank you very much, Sean. I think, well, first of all, I'll open up to any other members if anybody has any questions or any comments that they wanted to make. Councillor Ree.
Thank you very much. Firstly, thank you for the report. It seems very thorough, and I think the recommendations seem very practical. I just had two questions. Firstly, sorry, Chair, how much of this is? I don't think I'm saying anything particularly sensitive.
Well, I think we'll go for it, and if officers start shouting at us, then I think we'll know we're heading into trouble.
Okay. So, firstly, very minor point. One point you recommend that the new pension committee has 6 members. Would an odd-numbered committee not be more practical?
I understand 6 members is the approach of Hammersmith and Fulham. That's the number on the audit committee. So I've followed that. I've sought to follow what I thought was Hammersmith and Fulham practice. Okay. So that's not a sort of industry-wide practice then. That was based on what we do as well. The only other point was around paying pension board members to attend meetings. You cite the example of Wirral. Is this something that happens in many other places, or is this an exception rather than a rule? I've not carried out a thorough survey. I believe that Wirral would be in a minority, but I have to say that if you look at the LGPS regulations, in 2013, Regulation 106, which says a pension board is there to assist the administering authority. And it's very clear that that's the term, assisting. Well, if you look at the role of the administering authority, yourselves, that is, who represent that, it is huge. I think the role of assisting is very important, and therefore suggesting that a very modest remuneration is paid out of a fund which is, circa £1 billion. I'd suggest if we are encouraging members to attend, to be diligent, etc., that would be money well spent. We'll establish that practice from the beginning. that they pay now, I think, about £1,300 to their members. And they've had excellent attendance. I'm not saying that's the reason why, but I think there is so much work. If a pension board member does that work diligently, that there should be some recompense. And I think the amount you've set is a matter for the authority, and that's not for me to comment on. But I think the fact that there is some recompense shows that the authority believes that this is a valuable contribution, which I believe it is.
I think I just wanted to comment that I don't know if our own officers could comment. My understanding is that the amount put forward is possibly what we already pay co-opted members who are co-opted onto other council committees. So I think it was just to be in line with that. I don't know if any of the officers can comment on that.
Yeah, that's correct. Yes.
So it is the same amount as for co-opted members.
It is, yes.
Right. Okay.
Okay, thank you very much.
I think this is maybe just a little bit of a process question that I had in terms of some of the recommendations with regards to the creation of obviously separating out the subcommittee into its own committee that is then separate from audit. Again, probably a question for our own officers. What's the process and timeline for that? Would that come to the next council AGM? And is that the mechanism for having that pushed through as a decision?
Chair, yes. So if the subcommittee can endorse those proposals, then we're going to take them to the next annual council meeting, which is on the 28th of April.
So would that mean that this is effectively the last meeting of the subcommittee, and the next meeting that we have as a kind of pensions committee will be as a newly constituted independent committee?
It could be. Never say never.
Well, okay.
Meetings crop up, but possibly. Yeah.
That is true. That is true. And again, I'm not sure if this is necessarily going into exempt. I don't think it is. I think, is it possible for officers just to talk on maybe the few recommendations that were made that they didn't feel needed to be implemented?
Yes, Chair. The main one was with regard to the appointment of one single officer for the entire responsibility of the governance of the pension fund, which has got ramifications for the way in which the tri-borough arrangement is run. I would recommend that that one be set aside for the time being.
Yeah, no, that's fine. That's fine. I don't know, do we have any questions? Mike has a hand up.
Thanks, Chair. Hello, John. I just wondered whether you could talk a little bit about the, from the perspective of the members of the pension board attending the committee, and I can see why, in principle, that would bring them closer to my work and is a good thing. But at the same time, I had understood that when pension boards were set up, it was with the intention of keeping them quite separate from the decision-making end of things that would remain the responsibility of the committee. So could you just comment a little bit around that, about the distinct roles of the pension board versus the role of the committee? And I do completely agree with your recommendation of encouraging employer and members to join the committee as co-optees. It was the case historically that we had trade union representatives, but with respect to them, we didn't get a huge amount of engagement from them. And in the end, I think it fell off the radar because they just failed to nominate replacements for people who were leaving the committee. So if you have any examples of best practice where from other authorities we can encourage that engagement from employers and members, I'm sure we would love to take that on board, not from the want of trying.
I know it's a very good point. I think there's a number of issues there. Firstly, I don't propose any change in the arrangement between committee and board because they are clearly set out, as you've quite rightly said, in the regulations. And the role of the committee is to make decisions. The role of the board is to assist. My proposals regarding employer and employee representatives were that they should be non-voting as well, because, as I think I say in the report, the administering authority, the councillors of London Borough, Hammersmith and Fulham, have the legal responsibility and are ultimately legally responsible, so they alone should vote. But it is good practice, and that was laid down by the government in 2008 statutory guidance, that there should be employer and employee representatives on committees, and whether they're voting or not is a matter for the committee. My proposal is they should be non-voting. That is the normal practice elsewhere. And I did read, and I agree absolutely with you, that you've had difficulties in the past with obtaining trade union reps to attend. That is a matter for the trade unions. I think the recommendation simply is that they should be again approached and offered the opportunity. If they wish to take it up, which they do in certain other boroughs. I mean, I'm independent advisor to Waltham Forest and Haringey and Barking and Dagenham, and those three authorities, the trade unions turn up, and I have to say, make a positive contribution. You know, I hope going forward that will be the case in Hammersmith and Fulham. The reason for the employers is the employer base, of course, has become much wider over the years as more and more employers outside of the administrative authority have come in, and therefore I think it's, and again, the scheme of, sorry, the statutory guidance the government have issued, you know, say this, that they should have a place at the table to at least be able to put their views. But again, I would not suggest that they were allowed to vote, although that is a matter for the administrative authority, of course. Does that answer your question?
Yeah, I absolutely. You know, if we decide to try again, I hope the employers and trade unions will respond positively to the invitation.
And I do acknowledge and realise from the paper you've tried to do this in the past. It's merely another attempt on my part to say, let's have another go.
Thanks very much. Again, do we have any other committee members with any questions or comments? In terms of, again, maybe a bit of a question for officers, what's the kind of time frame for implementing some of these? I know obviously some of the recommendations can be implemented relatively quickly, so simply by officers without the need of going to full council or anything like this. Are there any that will maybe take a bit longer, or, you know, what are the different timescales for the sort of different groups of recommendations?
Chair, in the accompanying officer report, we have put a timeline for each of the 32 recommendations. So being very specific in the deadline to get that achieved. We are obviously aware that there is a programme in terms of the transfer of the administration from Surrey to LPP. So we have made allowance for that. Obviously that transition has priority, but it would be the intention of officers to provide updating reports to subsequent committees detailing the progress, and that will be an ongoing process over the next 15 months or so.
Okay, thanks very much. Any other questions from committee members? So I think obviously this for this particular agenda item, I think this is just to note the report. As far note the report which sets out the officer responses to the 32 recommendations made by the review. I'm assuming we're all happy to note. And then we're moving swiftly on to item number 5, which is made 3 specific recommendations with regards to this review. That number 1, that we note the recommendations of the independent review and the officer responses set out the report, that the Pension Fund Subcommittee endorse the proposed terms of reference of the Pension Fund Committee as set out in Appendix 1, and number 3, that if the Pension Fund Subcommittee endorses the terms of reference as set out in Appendix 1, that the monitoring officer is authorised to refer the changes to the terms of reference for approval to the council, to full council. I don't know if any of the officers want to speak on this following report. I know it's the same issue, but I don't know if there's any particular points that any of the officers wanted to raise on this before we actually vote on those 3 recommendations.
I mean, I can go through the recommendations if you like, but I think they've been mostly talked about already, so it's up to you, Chair.
Well, I don't know. Are there any particular comments, or are you happy for us as a committee to just kind of note or vote and approve those recommendations?
I've got nothing to add really. So if you're happy to vote on them.
Assuming there's no further questions from committee members, are we just happy to go ahead with the recommendation? So just to confirm, just for the purposes of the minutes, this is agenda item 5 and the 3 recommendations laid out there on page 26, which I've gone through. Are we happy to approve those? I'm noticing nods of head, nods of heads. In which case, thank you very much. And thank you very much, John, for your work. That's been really, really helpful. Oh, I noticed a hand up from Philip. Hello.
Chair, I wonder if I could clarify whether you wish us to remain on the call. So my name is Philip Pearson. I represent Hymans Robertson. And in light of the comments earlier in the agenda that you were looking to approve the reappointment of Deloitte as investment consultant later on, I just wonder whether you do need us on the call. Sorry to interrupt the flow.
No, that's fine. I'm not sure. I don't know, Phil, what are your thoughts on this?
Yes, Chair, I mean, ideally, in terms of this, it's a separate part of the agenda in terms of the clarification questions for the investment consultant. So ideally, those members of Hymans and Deloitte would be included in the conversation specifically at that time.
Well, what I was going to suggest at this point is, do we move those agenda items up and take that next? Because I think the next item is meant to be number 6 and 7 on the pensions administration. So I'm assuming then we would move item number 8 up to now and have a discussion on that now with involving both Hymans and Deloitte. Does that make sense?
Look, I mean, we're very happy to stay on if you need us. I just wanted to clarify. Given
no, that's fine. But I think I do, obviously, I'm sure there's, after we've dealt with those items, I don't know if you feel free to leave rather than hang about and have thrilling discussions about the inner workings of Hammersmith and Fulham. Sorry, John, I noticed a hand up as well.
Yeah, Chair, are you now content that I've given the presentation? Can I now go? It's only because if you want me to stay, I'm happy to. But
no. Feel free. Thank you very much for your report and for answering the questions so helpfully. Feel free to enjoy the rest of your evening, although I believe you might be off to another meeting.
I'm Waltham Forest in 5 minutes, but I did say it might be 7:30, but you've cleared the items rather swiftly, which is, I think, not inappropriate.
Excellent. Well, thank you very much for your for the review, and thanks for coming along to the meeting and answering questions. Have a good evening.
Thank you, Chair. Bye.
So just obviously for the members of the committee, are we happy to move the items up regarding investment consultancy? Is that okay with everybody? Does that work, Phil, for you as well? Are we okay to go ahead with that?
Yes, Chairman.
So I think if we just move on to agenda item number 8 in that case, which is page 53, and then we can come back to 6 and 7. So I think, well, I've got in my notes here for Matt Hobson, I think, is introducing this. I don't know if he wants to speak on this and give us a bit of an intro. Do we have Matt?
Yes, I'm here.
There we go. Hello.
I don't know if I've got in some strange view here. I'm finding it difficult to control everything. Yeah, so just to introduce the report briefly. So you members will be aware that we are currently undergoing a procurement process for an investment consultant. We have conducted this on a joint process with Westminster and Hammersmith. We've gone through the Westminster procurement process, and we've gone through the Norfolk framework, which was approved by members at the last meeting, which is the LGPS. The National LGPS framework is which is what is known as, but it's run by Norfolk County Council or Norfolk Pension Fund. Now, the investment consultants that we had that tended for business were Deloitte and were Hymans Robertson, who are both here today. They were asked a series of questions, and officers have got 2 questions that we'd like clarification on in particular. Now, these have been provided to the 2 investment consultants, answer for us here today, and also so that members may ask any further questions of the consultants while they're here, which will then be made publicly available as per the procurement process. These answers will be available. So the two questions that were prepared, we would like only verbal responses. I take it some have, I have received some documentation from Hyman's, which I will keep, and we'll keep on the file. But just for members' benefits, we'll want to hear these questions here today. Scoring may then be adjusted on the quality scores should then there be sufficient evidence to change the scoring based on the evidence we hear here today. So the two questions that were asked were how, the first one being, how would the consultants give a tailored service to Hammersmith and Fulham? So how would they adjust their service to ensure that they're meeting our needs in particular? And the other question was, how would they manage and keep up to date on the ESG requirements of the particular fund? So we're concentrating on Hammersmith only for this particular period. And the tender process is still divided into two. So even though this is a joint procurement exercise, Hammersmith and Westminster do have sovereign ownership of their own contracts, and do have the ability to pick different suppliers should they wish to.
And just to confirm, are we wanting people to kind of leave the meeting during individual presentations? Are we happy for everyone to remain in the meeting during this section?
So given that this will be actually available as part of the process, it might simply answering the question and answers is not necessarily in itself an exempt item, but given that it might be better if we can go into an exempt session just for this process, just for avoid the complications of two people listening to each other's answers, especially if one is going second.
I think the only problem is we're going to struggle to go into, we can't go into an exempt and then come out of it again. So I don't know what the process then is.
Chair,
yes.
Chair, sorry. Can I suggest that we actually pause this item then and take it later on in the agenda when it's to take it as an exempt item?
I mean, that's fine. I mean, I'm happy to do that. Does that mean, obviously it's just for the sake, obviously we've got kind of representatives from Deloitte and Hyman, so then going to sort of be hanging around until the end of the meeting. Are we happy with that? Or is there any other way in which we can manage this to deal with this issue? Not the actual decision making, but the answers to the questions. I don't know if anyone has any thoughts on that. I mean, is it possible, would you, obviously the decision making process, fine, the actual decision itself and the discussion around the decision in exempt session, we can have that at the end of the meeting, that's fine. But in terms of having the actual answers from Hyman's and Deloitte, do we want to do that now? Do they have to be exempt? Kevin?
Chair, just a suggestion. Myself, Richard and Andrew would be happy to leave and return to the meeting if that helps. We've got items in the agenda later on, so we will be here for duration anyway, so just an option if that helps.
Does that make sense, Matt? Are you happy with that, Rian?
Chair, it's on live on YouTube. So what I suggest is, even if maybe we take a 20 minutes, we could go into exempt session for 20 minutes so that members of the public are aware that we'll come back online in 20 minutes or something.
Okay, that makes sense to me. And then at the same time, would we want the three representatives from Deloitte? Are you happy to leave where we have Hyman's answer the questions and then come back in after? Or, yes, sorry, I'm trying to get this organised in my own head, how we move this forward. I mean, does that make sense? So if we have Deloitte leave for, say, kind of 5-10 minutes, and obviously we can let you know when you want to come back in, and we can have Hyman's just answer first, and then obviously they'd be free to leave as well. Yeah, does that make sense?
Chair, that works for us. We'll dial out and just let us know when you need it.
Okay. Matt, are we okay with that? Is that fine?
That sounds great.
Are you able to let them know when to come back in, Matt? Is that fine?
Yeah, I can let Kevin know and he can pass it on.
Okay, perfect.
Thanks, Matt.
We'll see you soon.
Chair, sorry. So the way this works is we can't make this meeting private for a bit and then go back, if that makes sense. Like this whole meeting is being streamed until Amrita presses stop,
Right.
basically. So we can create like a new meeting to go into just for a short time, but that would just take a few minutes. It's just, yeah, we weren't expecting this
Okay.
to happen.
Right. Okay.
So
Sorry. This is getting a little confusing now.
So we'd have, yeah, we can create a separate meeting to go into and just leave this one sort of blank, but this one will keep streaming. So like if we do that, if everyone can just turn off their camera and microphone in this meeting, you can go into another one. Amrita, you'll have to stay in this one though.
Is that possible? Is this the easiest way to do it?
I don't know if it's easy, but it will work.
Right. Okay. Yes.
So, or it does. I mean, if people, we could join a Teams meeting. Like we have Teams as well. So,
does that make sense for everybody? Is everybody happy to do that?
Like I could post the link in the description, and people can join that on Teams.
Just a quick question as a newbie to the committee. Are there certain things that we have to do in public, or I mean, what would be the problem with us just coming off YouTube now? I
would want to have as much of the meeting as possible in public rather than just, dive into it, because once we go exempt, then we don't come back out of it, if that makes sense. I think it's just for the purposes of having as much of the meeting in public as possible.
If it helps, Chair, we're obviously more than happy for our responses to be streamed live. I mean, we don't have an issue with that.
Yeah, I mean, I suppose that's the issue. Is there any problem with this being live now in terms of having the answers from Hymans?
If Hyman's happy with that approach, that sounds fine.
If Hymans are happy with the process, then officers are happy to comply with that.
And Rhian and David, are you happy with that? Is that okay?
That's fine.
Okay, let's go ahead on that basis. Sorry, Councillor Caleb Blandy has a hand up.
Hi, I would like to leave the meeting. I've taken Rhian's advice and she thinks that is probably appropriate, so I will be leaving the meeting. If I could be called back into this meeting after this agenda item is done, that would be good.
Yeah, no, that's perfect. Thanks for letting us know. I'll send you a message to let you know when you can come back in.
Cool, thank you very much.
Okay, I think are we happy now? Matt, are you happy for Hymans to go ahead and answer your questions?
Yes, thank you, Chair.
Okay. Thank you. We got there. Hopefully, Hymans can remember the question after all of that.
Of course, no, we most certainly do remember it. How long do I have? Would 5 or 10 minutes just to answer the two questions work for everyone?
I think that's perfect. That's fine.
Okay. Let me just begin by introducing us. My name is Philip Pearson. I'm proposed as your lead consultant. I joined Hymans last year after 20 odd years in asset management, and I've joined Hymans to focus on LGPS clients. I'm joined by my colleague Kenny Taylor. I'll just ask Kenny just to say a few words so you know where he's coming from too.
Yeah, no, thanks, Philip. Yes, my name's Kenny Taylor. I would be the alternate consultant. I've been with Hymans for 12 years now, but been in the pensions industry for 27. Sometimes an actuary, sometimes an investment consultant, but yeah, that's my background.
Thank you, Kenny. So let me start with question one. How would we tailor the service specifically to meet the needs of the Hammersmith and Fulham scheme? Where I wanted to start here is to explain to the committee that as you would expect, we have a very well-established, well-proven process for advising LGPS clients on the development and the implementation of their strategy. It's a process that we are all carefully trained on, and it's been evolved over many years. We use that process, though, to produce tailored solutions for every single one of our clients. We do not offer an off-the-shelf solution to any client. We build in that tailoring to each and every stage in the process. There are 6 stages. The first is to build an understanding of your fund, your appetite for risk, your relationships with your managers, and particularly, of course, with the London Civ. We help our clients to articulate their investment beliefs, your view on active versus passive management, your view on whether to engage or divest from companies that are experiencing difficulty. These beliefs are very much yours, and we find it incredibly useful to get those out onto the table so everybody understands them, because they are very powerful in terms of shaping strategy. When we come to strategy setting, and particularly the choice of different asset classes, as you would expect, we do a great deal of asset liability modeling to determine the mix of assets which is going to deliver your objectives with a level of risk to your funding position that you are comfortable with. The answer that we get always varies from client to client. We have noticed, of course, having looked at your fund, that some of the things that you have done over the last few years, and particularly the progression from equity into income-producing assets, these are the sorts of things that we would recommend too. But we would also look to help you with some of the more detailed strategic decisions. The next stage in the process is efficient implementation, and clearly the key thing there is working out to what extent you can and should use the London Civ, and where you do need to use external managers, why that is, and obviously we can help you in choosing those, in selecting and evaluating those managers. I would say that we work for 9 different London Borough clients, and each of them has quite a different view on the use of the Civ. And then the final area is monitoring and oversight. We can prepare very detailed, very comprehensive investment performance reports, but usually we tailor them. We tailor them to focus on the measures that you are most concerned about. We tailor them to provide the level of detail which you need for your decision making. The other thing that we can do is to integrate reports received from the Civ with reports received directly from the managers that you directly engage. Finally, on the strategy side, we have clearly noted your commitment to responsible investment and the goal that you set to achieve net zero by 2030. We would say that is one of the most challenging objectives that we've seen amongst our clients. We think that's very exciting. We would absolutely support that goal. We know that it will involve some significant actions in terms of reallocating of capital, repositioning the portfolio, and in terms of the stewardship that your fund managers exercise on your behalf. We would be very excited to work with you and set out the plan of actions that will be necessary to achieve that goal. Let me pause there in terms of the answer to question 1, and see if there are any questions in relation to that response.
Thanks very much. Councillor Thorley has a hand up.
Thank you, Chair. Thank you, Philip, for that answer. Just one quick question from me, and thank you for running me through the kind of 6 stages. I suppose my question is, how proactive a role do you view your role to be if you were appointed? And to give you an example to maybe help you answer the question, we've obviously set a target to have the fund carbon neutral by 2030. Yeah, how much do you think your role is about guiding and educating the committee towards strategies, managers that may more actively promote that? Yeah, would you take a very active role in that area, or would you look, I suppose, in a more passive way of saying, you know, the committee said this is the asset allocation, this is what they want to stick to, so I will promote those kind of strategies? How would you address that?
So we would take a very proactive role, particularly in relation to making sure that the committee was aware of the implications of the goal that it's set, and the actions that you will need to take to achieve that goal. We would take a very proactive role in terms of making sure you're aware of your regulatory obligations in relation to climate change, making sure you're aware of standards, best practice in this area, and that you're aware of the different solutions that managers are bringing forward in this area. And it is, you know, it is a very, very rapidly changing marketplace, as I'm sure you know. We can do that because we invest an enormous amount of effort keeping track of these things. We have a specialist team whose sole job is to keep track of developments in responsible investment. So we absolutely view it as our duty to alert you to all these things, to make sure that you are considering the relevant questions, to help you in answering those questions. However, it is your investment strategy, and we are very, very conscious of that. We're very conscious that the decisions that are taken around the strategy are decisions for you to take, not for us. And so we, at that point, at that stage in the process, we become slightly less proactive, because what we don't want to do is to force particular strategies, force particular solutions on you. We want to give you the options, explain the pros and cons and the implications, and help you make the decision.
Mike Adam has a hand up.
Thanks. And thank you, Philip. Can I just ask you whether your firm has a buy list, a firm-wide buy list when it comes to screening potential managers? Because some of the frustrations we get from managers is we think we've got a really good strategy, but to engage with consultants and get on their buy list. So how does that work in terms of Hyman's, and how you come up with long lists and short lists?
Sure. So we do have buy lists. In fact, we have 2 sets. One relating to managers in terms of their broader investment capabilities and investment outcomes, and the second is specifically in relation to their capabilities on responsible investment. If we agree that to a change in strategy that involves appointing new managers, we can do, and are very happy to do, one of two different things. Firstly is to offer you our preferred managers in the relevant asset class and strategy. And that is clearly the quickest and more efficient way of proceeding. Alternatively, we are very happy to conduct a full market search and prepare a very, very long list, and then progressively narrow that down, working with you. We are happy to work in both in both ways, depending on what your needs are.
Thank you very much.
I don't know if we have any other comments or questions from committee members or from any of the officers.
If we could just ask Simon, I know I've touched on it already, just to clarify some of the points of the second question.
Yeah, fine.
Okay, so the second question was to explain our approach to monitoring ESG risks and the performance of your managers in that regard, and how we would keep the committee up to date with this. There are, I think, three or four key areas that I wanted to highlight in the answer to this question. Firstly, looking at monitoring ESG risks. We have invested heavily in analytical tools that allow us to measure the exposure to a wide range of different ESG risk factors across multiple portfolios. We can do that either by taking input from the London Civ, to the extent that you're receiving reports on the assets that they are looking after on your behalf, and also in relation to directly held portfolios, and knit those two inputs together into an integrated fund-wide picture. It's a very comprehensive set of analytics. Usually what we would do with clients, and clearly what we would do with you, is to tailor that reporting to focus on those metrics that are most important to you. And given your goals, obviously climate change would be metrics would be very important in that respect. So this is measuring where your portfolio is, and whether you're making the progress that you expected relative to those goals. We also want to be forward-looking. So the other thing that we would update you on is the responsible investment ratings that we have assigned to the managers within your portfolio. We looked at this in preparing the original proposal, and we rate all but 3 of your current manager roster. So we're sort of well prepared to provide that input. These are ratings that look at a broad range of factors, but they are all those factors are providing an indication on how well the managers that you've appointed, either directly or via the Civ, how well those managers are managing ESG risks and taking ESG opportunities on your behalf. The third area that I would highlight is, and it sort of goes back to the answer to question 1 as well. because of the amount of time we spend researching matters responsible investment, whether that be new regulations like the Climate Financial Reporting Directive, which is most likely to come in your direction in due course, standards around reporting, for example, and the wide range of investment solutions that managers are now bringing forward in the responsible investment area. Not just in equities, which is where it started, but also in fixed income and real assets. So we spend a lot of time researching this and making sure that we're up to date. We know that you don't have the same amount of time to invest. So again, we think it's our responsibility to make sure that you are alerted to relevant developments, and where you decide there is something that you would want to investigate further, obviously we're very happy to follow up and do so. So those, I think those are the three broad areas that we would endeavour to keep you up to date.
Thanks very much. Again, just opening this up to any questions from committee members. Councillor Thorley.
Sorry, Chair, I know we've got a lot to get through, but a very quick question, if I may, Philip. You talked about this responsible investment rating that I presume is an in-house rating. I think what's very interesting about this is it's a way of potentially picking up, if you will, ESG style drift, which I haven't really thought of before. Yeah, how much of a risk would you say we as a committee should be thinking about the underlying managers who, you know, when they present to us, they all tell a lovely story. But yeah, we have seen, and I'm not saying within the portfolio, I'm talking more broadly, we have seen a drift over time. How much of a risk do you think that is, and how would you advise us on that risk? And also explain a little bit more about how the ratings are done, because we've talked a lot before about how hard it is to quantify in some areas the impact.
So I think there's two parts of the answer to drift, and ideally making sure that you are still on track. One is the hard metrics that we would produce in our or could produce for you in our regular monitoring report. They include things like the carbon emissions intensity, calculated for each and every holding in the underlying portfolios. There's really nowhere to hide on that metric. You've set a very challenging goal. You need your managers to make good progress, and that's a metric that will show very clearly whether or not they are making good progress. The second area is much more difficult. It is whether the manager is integrating RI considerations effectively into its decision making about buying new stocks, buying new properties, investing in new corporate bonds, whatever the asset is. And once they've bought those, assets, whether they are engaging effectively with the portfolio companies or the real estate sponsors, whether they're engaging effectively enough to reduce ESG risk going forward. So in the case of a property, whether the asset manager of the property is investing enough in improving the environmental efficiency of an existing property. In the case of a company, an equity holding, whether management is doing enough to reduce carbon emissions in its own supply chain. So we try to form a view on whether your fund managers are integrating ESG risk appropriately into their choice of assets and into their stewardship of existing assets. This is clearly a much more subjective matter, which is why we've taken the four broad areas that we think are important: culture, process integration, stewardship, and transparency. We've taken those four broad areas and broken those down into 26 different factors. And you'll be relieved to hear I'm not going to go through all 26. And we have set criteria about what we're looking to see, evidence that we're looking to see from the underlying managers that give us confidence that the manager has addressed each one of those 26 factors. We work through that. Those are subjective views, but the assessment is done in a structured way. That's what leads to our rating.
Thank you for a very detailed answer. Thank you, Chair, for letting me ask it.
Thanks very much for the question and the answer. Again, I don't know if we have anything else from any other committee members or any further comments from the officers. Matt, I don't know if there's anything you want to come in with, or are you happy?
I'd like to thank the guys for coming to the meeting today. I appreciate a bit of confusion there at the start, but yeah, thanks a lot for your answers, and we'll note those down accordingly.
And thank you very much for your time this evening. We really appreciated the opportunity to talk the responses through with you.
No, thank you very much. And yes, definitely thank you for your patience as we move through our technical and governance issues. And I hope you enjoy the rest of your evening.
Thank you very much.
Thank you very much.
Good night to everybody.
Good night.
Bye-bye.
And Matt, I don't know, are you able to let Kevin know?
Just sent a message now
Brilliant.
saying I'm back into the meeting. Hopefully that's swift.
It does seem to be the evening of technical problems, as everybody seems to be having bandwidth issues.
That should be, they're just logging in now, so
okay.
With a second, hopefully. I assume if we're able to ask the same questions to them, that would hopefully not take too long.
I think I'll be still waiting for Kevin.
Chair, should just be joining now with both.
Ah, there we go. Welcome back. Again, Matt, do you want to lead just with the questions, and then we can listen to the responses and then go into questions from members of the committee?
Yes, so they both had the same two questions. So they've had them in advance, so they're aware of what they are. So I'm just happy for them to get on and present their answers or clarify their answers.
Any particular order, Matt, or will we start with the question on how we tailor the advice?
That would be great.
Right. So sorry, just introduction for the meeting as well, and for new members that might not have saw me at the last meeting, I'm Kevin Humferson. I've been the lead advisor to the pension fund for the past 5 years. We've got Richard Slater and Andrew Billman, both in the call too. Richard's the senior partner of the investment team. Andrew supports me with the advice and the engagement. Just to answer the first question then, so how do we tailor our advice specifically to the Borough of Hammersmith and Fulham? Well, at Deloitte, this is something that we're really strong on. We tailor all advice to each individual client that we are advising. We don't operate with house views, so it's not the case that we formulate views and all clients get the same advice. We firmly believe that for advice to be effective, it has to be tailored to the needs of the fund, the needs, your liabilities, your attitude to risk, your cash flows, etc. Now, you may know we advise Westminster as well as Hammersmith and Fulham, and I think what we've tried to structure from a team point of view is a team that will allow consistency, but also focus to you. So I'm the lead advisor to Hammersmith and Fulham and also to Westminster. Richard is the senior partner of the team, oversees all advice clients, both funds. But we've got Andrew and we've also got Johnny Moore, who are supports with both engagements. So both Andrew and Johnny will work together where there's areas of overlap, such as certain investment managers and also general LGPS market, the London South, for example. But Andrew has a sole focus to this fund, to get the benefit of collaboration, but also to stay entirely focused to your needs, whereas Johnny has a focus to other funds. I think that allows us to deliver what's a collaborative approach to our advice, making use of commonalities, but also making sure that our advice is very specific and designed. And sorry, just a final point on this. We feel that the way we tailor our service to you is about working collaboratively with you as much as the advice that we give to you. And by that, I mean advisors, officers, and members working collaboratively. I think this committee is fortunate to have the experience that it has, the experience with the pension fund, but also the wider experience with investment markets. Mike, for example, I know you're well connected and have at times have brought views on investment managers and new investment managers. The same with the officers. Both Phil and Matt have brought views on investment managers, and we do too as advisors. And I think when that happens, it's a case of we all get together to consider these new ideas. We'll formulate a view. We'll perform due diligence, and we'll give advice to these managers. But it's very much a collaborative approach. And when we do that, it's not on the basis of a new project, a new engagement, or the meter running, as something extra. We really see this as part of our role, and part of our role to be able to give you the right advice and the right approach to our advice. So that's how I believe we've flexed to enable us to work most effectively with you. And when that all comes together well, it comes together for the benefit of the pension fund and the investment performance of the pension fund. I think there's a lot of examples we could use, but I'll use the most recent, given that it's fresh in the mind. And that would be the latest piece of advice to disinvest from the M&G Inflation Opportunities Fund. And this was an example of the collaborative approach that we've got. So it was following the pandemic and the immediate impact it had on markets, which was really significant, as we know. But one of the key areas it impacted markets was on UK commercial property. And whereas other markets we felt may rebound, we didn't necessarily have the same view on commercial property. The fund was overexposed at the time to commercial property. And if you looked across the exposure with the 2 long lease mandates, we could see that this overexposure with M&G could potentially have an adverse effect on the level of risk that we were running. So that was the advice part. That was from us in the advice. But at the same time, we all moved to online meetings. We weren't able to see each other. The officers reacted really quickly, changing the constitutional governance to allow us to meet in forums like this and to allow us to make decisions in forums like this. And equally, the members adapted your approach, whereby before we were at quarterly meetings, we actually started meeting every 2 weeks to allow us to keep up to date with markets and talk about markets as regularly as we could. And it was the approach from all three that got the result for the fund it wasn't simply the advice, it was the approach from all three that meant, you know, you were able to action the advice and you were able to implement that advice, disinvest from the M&G fund in September at the earliest opportunity when we did, and we actually disinvested at NAV, which if you look at the markets today, and if you actually look at that fund today, both the trailing NAV, but also the secondary market pricing, where you're potentially looking at a 5 or closer to 10% reduction to try and sell from these types of assets today. So as I say, I think there are many examples of where we have all worked together quite well. And when that happens, it's not simply about the advice that you get, it's the approach from all groups, the ability to react quickly to the advice. And as I say, that's what brings about, in my view, the real benefit for the pension fund and the benefit in the investment performance. Just a pause for questions there, but Richard, I'll bring you in case there's anything you want to add.
I think Kevin, and for everybody's benefit, the key part of working with our clients is making sure we understand your circumstance. So key factors is making sure the investment strategy is closely aligned to the actuarial funding approach, understanding where your funding level is, the level of risk we can take, making sure we get that diversification in the portfolio, and also thinking about granular things like future cash flow requirements, making sure we're not investing to disinvest and things like that. That is how we derive investment policies which meet your needs and are specific to what you're trying to achieve.
Thanks, Ferdy. Thanks very much. Just opening it up to questions. Do we have any questions or comments from members or from any of the officers? Not seeing any hands, so I don't know if Kevin, feel free to carry on with the further questions.
Will do, Chair. So the second question was our approach to ESG monitoring and how we make the committee aware of views. So firstly, I'll say that ESG metrics very much form part of our research and form part of our ongoing monitoring. We're quite particular in this point when we say ESG metrics, it goes beyond what would be the sort of greenwashing, if you like, that we've seen creep into the industry where managers have a particular stance, or at the front of the fund it looks like it has a particular ESG stance. We go well beyond that and underneath to make sure that we are well aware of what the investment manager is doing with regards to ESG, how ESG impacts their decision making and impacts the risk in their funds. So that all forms part of our research. We score it as we score it along with other areas like business, team, personnel, risk attribution, and it all forms part of our overall view, which when we look at new managers, we include it in the specification and BD when we're looking at new funds. And as for your existing managers, it's included in our ongoing monitoring, which forms part of the quarterly reports. I give you an example. You'll have seen, and we've spoke about in quarterly reports, the developments Legal and General have made, for example, bringing in various personnel to enhance the ESG team, the development of new funds that we've looked at and funds that we've also gone on to use. So that's an example of where it comes into your quarterly reports. We have, however, done more than this. We produced an annual ESG monitoring report a couple of years ago, and this was sort of an example of the fund moving ahead of time, if you like. We suggested it might be something that you want to look at on an annual basis rather than a one-off. And effectively what this report does is it delves into much more detail about the investment firms and the strategies and what they are doing with regards to ESG. So for example, stock voting on the equity portfolios or in other securities, their engagement with companies, the stewardship with companies, on some of the real assets, property, for example, the developments they are making to those assets to make the buildings more sustainable and more energy efficient. All of that is included in a one-off annual report. And as I said, it might be something that we want to look at, formalising or doing on a consistent basis going forward. We've also compiled some carbon analytics and worked with another carbon specialist to give you a carbon footprint of the portfolio. We first did this a number of years back when the council made the commitment to be carbon neutral by 2030. We wanted the investment portfolio to mirror this, and really strong progress has been made on that front. I can go into detail on some of the exact metrics that we use, but the headline effectively is, when we first did this a few years ago, the carbon footprint, if you like, the carbon dioxide exposure of the investments you hold was higher than the index. Whereas today, or 6 months ago when we did our last assessment, it was actually 57% lower than the index. So over a 60% reduction in the carbon footprint of the investment portfolio that you have. And that's only looking at the equity changes we've made. What will happen as data becomes more readily available and the industry moves on, we'll do that assessment across others. But we have been cognizant of what we do in alternatives. The Aviva fund, for example, investing in renewable infrastructure assets. But I think both of these pieces of work, both carbon and the ESG monitoring that we have done, makes the fund really well placed to react to incoming TCFD disclosure requirements. It won't impact this fund this year or next, but it will probably come in the future. And again, I suspect you may want to be ahead of the curve as you have been in the past. And that's something that I think, given the work we've already done, we're really well placed to build on that, to ensure that the ESG monitoring that you're already getting is continued. And as the industry improves and there's more data available, we incorporate that into what we're already doing. But Richard, if you could touch on some of the pieces we're doing wider Deloitte in this area too.
Yeah, I think that this is a real area where we can benefit from leveraging off the wider parts of our firm. We have consultants working with companies at the moment, working on their carbon footprint, how they can report it, using our assurance people, actually developing standards to avoid gaming of this. Because what we see is, if you look at larger companies, they are far better at communicating what their carbon footprint is than smaller companies. Creating a level playing field for our assurance people, but also working with companies to change their supply chain. That enables us as an investment consultancy team to be able to understand what's happening in the market, what the moves are, what the issues we face, and making sure that there's far more robust reporting when it comes to our asset owner clients being able to report on things like carbon footprint, ESG metrics. The final point I make is, not surprisingly, we work with a number of fund managers as well, who also recognise the importance of this, with the need come 1st of October for some of the larger clients to be reporting on this. Final point I make is, these changes we think are something that Deloitte well placed to help with, simply because of the scale of our team. We're not just coming this from an investment consultancy team. We have the leverage both across the UK and globally to assist and actually shape this position.
Thanks very much. Again, opening it up to members of the committee or any comments from officers. Councillor Thorley.
Thank you, Kevin. Thank you, Richard. Just a very quick question from me. I appreciate both the answers you gave. How do you balance those two kind of, in some areas, maybe conflicting objectives of what we want to do as members? Because clearly you need to provide us with the right investment advice and balance that against the ESG requirements. So it's in the agenda, it's in the public domain. We're looking for inflation protection at the moment. How do we balance that against, say, looking at ground rents where there's very limited scope for the managers to intervene against, if you will, the requirement to make the fund carbon neutral by 2030? How do you balance those two potentially competing aspects?
I think, if I can take this one, I think it's a great point, because it's something we are very conscious of as well. And actually, when the discussion first came about, it was something we were very conscious on. You may not have been on the committee at the time, Matt, but we did a sort of an education piece, and which is something that we've actually done with all clients, because as much as we're seeing a trend in the industry on carbon neutrality, it's important that the carbon neutrality is there for investment reasons, which it is in this case. It's there for risk reduction reasons, and so it's not simply about, this is where I mentioned earlier about greenwashing. We talk about it at Deloitte quite often. It's about why are you looking to reduce your carbon footprint? What's the rationale from a risk perspective? And the rationale is, dormant assets, potential political change, potential change in society that will result in the investments that you hold. And when you understand that, it's then much easier to look at different funds and what different funds are doing and make a decision. So that's where we make sure we don't get a conflicting approach. The decision to operate on a carbon neutral basis, an investment fund, mirrors the risk management that you're taking and the return requirement that you need from the investment fund. So it's something that we are very, because I say it's a really good point to be conscious of, and it's something that as we always make recommendations and are aware of the carbon objective, the two should work together. As I say, as we have done here, the point that there's a strong rationale for the carbon neutrality decision, and it's very much an investment and risk rationale is where the two can come together.
And Matt, just thinking about the presentation we had on ground rents, actually part of that debate, although the ground rent was why would we hold hotels next to airports? So even at least coming back to that, it was something which we're picking up on. We want to hold ground rents, but there's better areas of ground rents we may want to hold, which with our sort of making sure we think about our ESG credentials here, we can actually tilt that ground rent portfolio to one which better meets what we're trying to achieve.
Thank you both.
Thanks very much. Again, any further questions from members or any comments from officers? I think obviously in terms of the actual decision-making process, are you guys, everyone in the committee, are we happy to leave that to the very end of the meeting in the exempt section? Fine, in which case, thanks to everyone from Deloitte, although I'm sure you'll be sticking with us to enjoy the rest of the meeting, I'm sure. So obviously we'll complete that item later on at the end of the meeting. So just to make life very confusing for everybody, if we move swiftly on backwards to item number 6, pension administration update, and then we've also got item 7, similarly, pension administration performance. So item 6, David Hughes, I believe. Welcome. Hello.
Thank you, Chair, and good evening, members. So you have before you an update report which focuses on the work streams that are set out in section 7 of the report, which is on page 41 of the public agenda. And just briefly, we've made good progress in terms of our workforce and recruitment. There's one position we're still looking to fill within the structure. You'll know from the meeting last month that we were you approved the recommendation to appoint LPPA as our pension administration provider from 2022. I'm pleased to say that Lancashire County Council, who are the host authority, agreed last week to enter into the delegation agreement with Hammersmith and Fulham, and we're now in the process, obviously, of going through ensuring we agree the delegation agreement in detail with LPPA, and the work is already starting with them in terms of our project planning. Just to confirm as well, we've extended the Altair Hayward, so the Hayward Altair system, which we currently use with Surrey for Pensions Administration, to take us to the point at which we transfer. We've also appointed ITM to carry out the caseload backlog project, which we've talked to you about at the committee before. So that's now commencing. And the work on undecided leavers, which the RBKC retained team were working on, has progressed well as well, with the vast majority of those cases now having been resolved and updated in the system. In terms of the legal contractual side, we're still in, we've served notice on the Surrey County Council, but we are still liaising with them in terms of the terms of the exit and the costs for the exit and the fee proposals they'd put to us previously. And we're waiting for them to come back with us on further correspondence. On paragraph 27, there was a successful transfer back of the retained functions from RBKC by the end of December. So that's all gone smoothly, and Eleanor and the team are working well now, having picked up the service from then. And we are working with colleagues at Surrey on the exit plan, the detailed exit plan, which we and other parties who are exiting Surrey at the same time are in conversations with, to ensure we have a smooth transition from Surrey and we transfer the data effectively from Surrey to LPPA for the start of the new service. So I'm happy to pause there and take any questions from the committee.
Thank you very much. One question I had just very quickly on the very colourful table on page 52, I did notice just transfers in, transfers out, transfers in, transfers out, about halfway, 2/3 of the way down the table, quite a big drop. You know, it says actual score December, 80% transfers out, 100% transfers out, and then that really drops quite significantly. Is that something we should be worried about? That seems a fairly big change and not a great direction.
Thank you, Chair. That's on the next report. So I'll ask Eleanor to come in and answer that one, if that's okay.
Fine. Okay.
We're happy to pick that now, or if you like, if Eleanor.
We'll pick it up now. Well,
yeah, while we're there. So Eleanor, are you okay to come in?
Yeah, sorry, I'm just trying to.
No problem.
So Eleanor Dennis, pensions manager. So yes, I was going to pick it up in the next paper, but and it would make more sense, Chair, to pick that up when I'm talking about the other.
No, that's fine. That's fine. Happy to leave it until then. Again, well, I don't know if we have any other questions from any of the other members of the committee. Any other particular points? Oh, Councillor Thorley's got a hand up.
Just a very quick one, Chair. David, thank you for your report. Looking at the timetable, proposed milestones on page 47, I can't, as obviously it's quite recent we've looked at this, there doesn't appear to be any slippage. Are we still reasonably confident this is a robust set of milestones and timetables that we can do all this?
We are, and indeed in February we've been working on some of the March actions with LPPA already, and we're working closely with Surrey to make sure that we can get them to discharge all their responsibilities as well. So I'm comfortable at this stage that we have a good plan there that's perfectly achievable to go live on the 1st of February.
Okay, thanks.
And again, I don't think we've got any further questions. I'm not seeing any hands up. Obviously, item number 6, this update recommendation simply that the contents of the report are noted and further updates will be provided. I'm sure we're all happy with that. I see a thumb up. I think we're all okay. So now we'll move on to number 7, pension administration performance.
Thank you, Chair. So Eleanor Dennis, pensions manager. So this paper sets out the pension administration performance from Surrey County Council for the last 3 months, so namely November and December of 2020 and January of 2021. So before I summarise the performance, it's worth the committee noting that the guidance from the pensions regulator during the COVID-19 pandemic is that administration as a minimum focuses on pay impacting activities such as deaths, refund and retirements. So if we go back to the performance on those key areas, you'll see that in the last 3 months across those 3 areas, activity on the fund has increased. Firstly, in deaths, in November and December, we had quantities of 13 and 17, and then unfortunately that jumped significantly in January to 28 cases. The Surrey team have recently changed the processing of the way that they process the death cases, which has meant that, albeit unfortunate that one case did miss the SLA, they were able to cope fairly well with that influx of cases in the last month. Retirements didn't fare so well. In November, we had 19 cases, and then staying fairly stable in December and January at 27 and 26 cases. Now, the reason that those figures have dipped, or performance has dipped in that area, is because a number of the team were taken off various sections, including transfers, to implement a new system called Admin to Pay. And they were involved in the testing and implementation of that, which basically automates the payment aspect of any process. So rather than someone processing a retirement and then having to manually put into payment the lump sum and an applicable monthly pension, it would be all part of an automated process. So Surrey implemented that themselves on their own fund, and we were next in line to do that. So going forward, I expect to see an improvement in those performances. Refunds also, which saw the most increase in the quantity numbers, going from 1, 10 and then jumping up in January to 42, with one case falling outside of the agreed SLA. Again, I think the fact that it was only one, given that significant increase, shows that there are improvements being made on the team at Surrey, and their productivity is increasing. So in summary, performance over the last 3 months has been disappointing, but it has improved along the key areas in line with those that the regulator recommends are priorities. And I will continue to work with Surrey to challenge that poor performance and also collaborate on solutions when applicable, in order to increase performance and meeting of the KPIs. Welcome any questions.
Thanks very much for that. Again, any questions from members, or are we quite happy with this? Councillor Thorley?
Sorry, Ted, two very quick questions. The first question, obviously, I know what you say in paragraph 1, and obviously the new focus that COVID has required the administrator to adopt. Has that had any impact on the data cleansing exercise we've been doing? Because I would have thought if people have been dragged off to focus on these other areas, that would have had an impact. And then I've got one more question in a second.
Thank you, Councillor Thorley. So in terms of data cleansing, we've agreed as a fund to take that away from Surrey and engage with a third party called ITM. So they will be collecting all of the backlog cases and processing them themselves. We've already had, just this week actually, an initial fact find seminar whereby the business as usual team met the ITM team along with myself and went through some of the processes in order to complete the cases, and middle of this month we should have an up-to-date view of what that backlog more recently looks like, given that the last extract was in February 20.
That's great. So we're satisfied we've got all the data we require to, if you will, work with the third party who's looking at it. There's no issues in terms of communications and so on.
Absolutely, because they will take a fresh data extract and analyse that data themselves, so it won't be reliant on Surrey.
That's great, thank you. And my second, and I promise, Chair, final question on this is paragraph 2.2 regarding the telephone service, which is operating reduced hours. I can imagine there is a very good reason for this. Could you tell me what it is and what impact do we think, if any, that reduced service is having on the operations?
So thank you. In terms of that reduced service, that's purely because of logistics. In terms of the call centre was a call centre based on site. Surrey are actually moving location. Not everybody has access to a mobile because of the cost of that. That they do it through the laptop, and because of the complexities of people's availability, their personal circumstances, they're not able to provide the same service to us. So it remains reduced. The impact of that, members are still able to contact Surrey electronically, and if a member does need contacting by telephone, they can email them and they will receive a call back within a reasonable time frame.
Thank you.
Thanks very much. Not noticing any further hands up. Just again, for the purposes of the recording and for anyone watching, the recommendation on agenda item 7 is just that we consider and note the contents of this report. So I assume everybody is happy with that. That's great. And then again, thanks to the officers for the report and for answering the questions. And also, again, thanks for all your work on this ongoing saga. It's definitely very much appreciated. And I know how difficult it's been, but it does seem, I think as Councillor Thorley said, there seems to be good progress and very, very little slippage, which is really, really nice to see. Moving on swiftly, just to make life a little bit more complicated, just in case anyone has an old copy of the minutes, item number 9 has been withdrawn, but I think we probably all got an email just to confirm that, but just in case anyone had an old copy of the minutes. Items 10, 11 and 13 do all have exempt sections. 12 and 14 do not. So I was going to suggest we have 12 and 14 now, and then we move into exempt session, if everybody's happy with that.
And number 9, sorry, is ground rents and social supported housing.
Oh, sorry, I'm going by the old minutes. The copy of what I've got here is number 8, investment consultancy procurement, and number 10, ground rents, because I think number 9 was meant to be actuarial procurement, but that's been withdrawn. Sorry, I was going by the old numbering of the old agenda, which is also the numbering on the new agenda with that item removed. I think just to ease everybody's minds, I think if we go on to what I have on my agenda here is number 12, I've got independent consultant review, and 14 is business plan. I was going to suggest, whatever your numbering happens to be, that we go on to independent consultant review, as that is not an exempt item. Are we happy with that? Okay, so if we go into independent consultant review, again, I have that as 12. It might be 11 for some people. Phil, I think I've got you as introducing this.
Thank you, Chair. So this item arose from previous discussions at this committee, reference the use of an independent consultant to work in conjunction with the official incumbent Deloitte. The main benefits of this is such an experienced individual would challenge group thinking, challenge the or work as a devil's advocate for suggestions and discussions, and basically contribute as an additional source of expertise to the current consultant and officer roles that exist in the governance of the pension fund. It is quite a common appointment throughout the LGPS. All of the funds that I've worked with outside of London have utilised the services of an independent consultant to good effect, and it's always been excellent value for money. It's not for every fund. Some make a deliberate policy of not employing an independent consultant, but it's something that the committee asked me to explore and set out the pros and cons and the costs, and the case for such an appointment, which obviously is set out in this report. So basically, it's open for discussion amongst the members with a view. If members are in favour, then officers can go away and arrange the appointment process.
Thanks very much, Phil. And also, just for clarity, I think this is also, we jumped the gun. I think we were so eager to talk about this that we jumped the gun in that it's also a recommendation from Mr. Raisin's review as well, I think.
Yes, it is one of the 32 recommendations, Chairman.
Yeah. I mean, I think certainly for my own part, I would be quite happy with having a further advisor and going along with this recommendation. I think maybe when we had some initial discussions, I don't know if I was totally convinced, but I think obviously we've got new committee members. We're liable to have further new committee members as and when we kind of go along with the rest of the recommendations and change the nature of the committee. So I think I'm fairly convinced that this would be quite helpful. I don't know if any other committee members have any thoughts or comments. Mike?
Thanks, Chair. I don't feel particularly strongly about it either way. I can see the benefits. I can see why we might feel we're already for adequately advised. And all I'd say is that if we did go ahead and do it, then that would be another voice in the room alongside officers and Deloitte and the committee. It would be very important that the profile of the person that we choose, one that we feel would contribute very constructively, and that the chemistry would be right, and that they didn't feel they had to disagree for the sake of disagreeing, because that could sort of create a stalemate, and actually, rather than to take us forward, might actually make it harder to find a consensus.
Yeah, no, I think that's, I suppose that maybe it did lead me to think of exactly, I suppose maybe just from officers, I suppose ultimately as councillors, we are taking the advice from officers. I think maybe this is a bit of a question for the officers. What happens, or have you had any experiences? What happens if the two advisors disagree? What advice would we receive then as the actual members of the committee from officers? How do we, obviously, again, as Mike said, you would hope to reach a consensus. But do the officers have any kind of comments on that? What happens if there's a disagreement? Is that something that comes up in committees like this when they have two separate advisors? And if so, is there any kind of route to resolving that?
Yes, Chair. And in my experience, which does go back a good number of years, it's very rare. In fact, I can't really think of any instance over 3 county councils over about 18 years experience. I can't think of an instance where a disagreement has not been able to be resolved prior to the meeting, such that a consensus view is formed and a united front presented. That's not to say that in the discussions and the forming of opinions throughout the committee, then certainly the devil's advocate role can be played and placed, but when it comes to making final decisions and being collaborative and forming a consensus view, I've never experienced an issue there.
Okay, thanks very much. Do we have any other thoughts from other committee members? I mean, I'm certainly happy just to, again, just for the purposes of recording, etc. Let's have a look. The recommendation is just to note the report with a view to formulating a decision on a selection appointment process. Phil, I don't know if you just want to run through exactly what your thoughts were on this process and how we would go about doing it.
Yes, I mean, on the conference circuit, there are, I would estimate, around 20 to 25 consultants that I know personally who work as independent consultants for LGPS funds. So in terms of formulating a long list and a short list for the committee's approval, that would not be an issue. So in terms of the talent pool that's out there, it's in terms of accessing that, it's not a problem at all.
Okay, and then would that be, what kind of timescale were you thinking of, or would we be looking at for bringing that to the committee?
I would say such a process could probably be done within a couple of months, Chairman.
Okay, okay. So assuming there's no other questions from anybody else in the committee, obviously recommendation, note the report with a view to formulating a decision on a selection appointment process. Are we happy to go ahead with that? Got some thumbs up, some nods of agreement. So I'm assuming then from the officers, that's, you guys will come back to us with a kind of process that we can then discuss in the future.
Yes, Chair, agreed.
Okay, that's great. Thank you very much. Moving on, just a little bit, obviously we've got a bit of numbering confusion. I'm just going by the numbers of the agenda that's on the website, as I suspect that's the council's website, as I suspect that's probably what most people are looking at. The final item, number 14, business plan. Again, I'm not aware of it having any exempt items or any part of that going to be exempt. So I'm happy to move to the very last item. So I don't know if we have Who's going to be introducing this?
Yeah, I just wanted to raise that leisure development fund. I think that can also be taken in the open item. Phil, can you confirm?
I've got, just to say, I've got that part of that is on the exempt agenda. There's a report, Darwin Leisure Development Fund document that is in the exempt agenda that was sent round earlier today, just before 4 o'clock.
Yeah, it's just the fees element of that paper. So the paper can be discussed. It's only the fees on the last page that we didn't want to put in the public domain. So I doubt we'll be discussing that today. So it's just the principle of the fund, and I'm sure that can all be covered in open session.
Okay, no, that's fine. I'm happy to take it. Well, I think just for sake, I think if we just continue on with business plan, just while we're on it, get that out the way. So I'm going by that as page 133, agenda item 14, pension fund business plan. Matt, I've got you down for introducing this.
Thanks, Chair. I don't want to labour on the detail of introducing this report. I simply want it's best practice, and it's one of John Raisin's recommendations is to have a business plan. But we had this in the works before. It's actually an audit recommendation as well for the committee to be presented with a costs summary for the year ahead that they can then approve. So that's not something we've had before, but it's actually one of our audit recommendations. So as such, we've also put that as part of the business plan. I think a lot of the things in the business plan we're already doing as a committee and as officers, but it's good to have it formalised in an official document that we can look at and we can see what we're doing, and that we can then, at the end of each year, we can take a look at this, produce an outturn report, and we can essentially tick all these items off and say, yes, we did this, we did this, we did this, so that we know that we're fulfilling our full functions as a committee and as officers as well. So that's all I wanted to say in terms of the introduction of the item, but I'm happy to take any questions on any of the specifics. I realise there's quite a lot there, so there might be some specific points people want to discuss.
Yep, thanks very much. Mike, that's a hand up.
Thanks, Chair. Thanks, Matt. I thought it was really helpful to see all of the investment management fees in one table, because otherwise you have to, I think, kind of piece it together in the quarterly report. I'm wondering whether you might consider showing the fee on that table as well as the actual cash amount, maybe show it as basis points as well, and then we get a, because not all the mandates are the same size. So if we know that we're paying, say, 0.5 or 0.75 as well as the actual cash, it does also help to put it in a bit of context.
The only reason I haven't included that on the face of the document is just for we want it to be a public-facing document that everyone can see. So I'd be happy to include that as an extra appendix. And we also do receive that information as well. It's part of our monitoring report from Deloitte that we receive quarterly. So we do have that in another place. And that's why it's not included on the face of that document, just because it might cause some transparency issues with regards to sharing it more widely, which I think it should be available to everyone on our website, really. So that's the only reason it's not included.
I'm not sure, are there any other questions? I think, again, the recommendation is simply to comment on and approve the business plan. Obviously, quite a lot left to discuss. I'm assuming we're just happy to approve. Some nods of agreement. No dissent. Excellent. Thank you very much. Are we happy then with regards to the Leisure Development Fund? Are we happy to talk on that in open agenda as well?
Yes, Chair.
Okay, fine. So if we move on to that, again, sorry for jumping about everyone. I'm sure everyone's following this as we all have an intimate knowledge of the agenda tonight. So what I've got is agenda item 13, page 130, Leisure Development Fund. So Phil, got you down to introduce.
Thank you, Chair. So this is a prospective investment for which officers have received presentations from Darwin, which is the alternative investment company. And their objective is to provide a an alternative investment approach on leisure development. So Darwin started in their quest in this alternative niche class in the acquisition of leisure facilities, mainly camping sites, caravan parks up and down the country, and then turn them into luxury mobile homes and holiday park sites with all of the associated facilities as part of the package. Now this has grown over the years. It's become a local government pension scheme investment option, certainly over the last 6 or 7 years, and is invested in by around 10 to a dozen LGPS funds up and down the country. At the moment, obviously, we've, as officers, and also in conjunction with Mr. Adam, we have, at the stage where we are in consultation with Darwin, we are impressed sufficiently to present this as a prospect for the fund, and that's set out in the exempt appendix, which is the Darwin information pack, along with the fees for which they charge. So I would hope that members have read that pack, and we would be, as officers, happy to answer any queries and questions.
Thanks very much, Phil. Opening up to any questions. Councillor Thorley.
Just a quick comment, Chair. I think this is a very interesting proposition before us. I would welcome the opportunity to look at some more active proposals by managers. I'd say two things on this really. Is I think that the growth of this industry actually seemed to start post the Brexit vote when sterling fell off a cliff. And a lot of people went into these holiday homes and so on, and it's quite a sticky source of income. And obviously with the pandemic, it's kind of doubled down on that a little bit. So I think actually in terms of what we're looking for in terms of inflation protection, I think this is a very, very interesting thing to look at. So I just want to say thank you for bringing this to our attention.
Thank you, Matt. Yes, it is one of those areas that since Brexit and also since the pandemic and the lack of any options in terms of going abroad, where the UK population has turned its eyes to the staycation option within the UK, and certainly the Darwin Fund has benefited as a result.
I have to admit, reading the report on it, or the kind of document that they passed over to us, I was very amused to see Dundonald Links, which is about 5 minutes down the road from where I grew up and used to be a really dodgy old abandoned military barracks, and has certainly rebranded itself as high-end luxury golf course, which is not what it was about 20 years ago. That was very amusing to see. I don't know if we have any other questions from anyone. I suppose, well, actually, I just wanted to come in. What's the kind of long-term thoughts on this as an asset class? Obviously, it seems to be something that's going to have a short-term boost. Yes, there's staycations, there's Brexit, etc. Has it got long-term sticking power? Is there a long-term future of people kind of staying in this area? Mike, I think, has got a hand up.
Yeah, just to respond to that, and I don't know if Phil or Kevin want to come in, because they also met with them when I did. An interesting part of the proposition is that it's an aggregation play, and that the market in the UK is very, very fragmented. The biggest market players only have a relatively small percentage of market share. So to your point, Chair, yes, that Darwin would put forward arguments, I'm sure, why this is a growth play, but just from the point of view of them hoovering up assets and then adding value to them, they're able to actually achieve economies of scale and extra profit relative to operators might only have one or two sites. So that, from my understanding, that's been quite an important driver of why it's been so.
And are there many other players in this field? This seems kind of relatively new.
I think, Chair, from the research we've done on it so far, and certainly would be keen to do more, you'll find assets like this as part of other funds. So you actually see some similar assets in actually a bit like the M&G fund. It sometimes creeps into different property type funds. I do think from spending a bit of time with Darwin and now looking further into the sector, it is one where specialism can add a lot of value. And not being a caravaner myself, I am now pretty aware that Darwin are probably the market leaders in this too. So to Mike's point, I think it's a combination of, one, there's a lot of demand now that's, as Matt says, it's grown steadily over the years and now probably a bit exponentially in the past 9 months. But also it would be looking at the Darwin as being a bit of a specialist provider. If you look at the repeat business from customers that they get and the sort of advanced booking going into the years, you can begin to almost predict the cash flows going 2 or 3 years ahead. So it is definitely stable business and steady income, and part of that comes from the Darwin brand, I think. But definitely would be keen to do some, I think, more research needed, and also have a wider look as to where it would fit in the portfolio.
And Chair, just one thing to really loop back to what Matt mentioned about ESG earlier on. When you're thinking about holidays, carbon footprint, providing holiday facilities which are high quality in the UK, you can see there is a significant climate change play there as well.
I have to admit, yeah, it's even just to comment, I think my aunt and uncle, who would never have been seen dead, have joined the caravan club. I mean, it's going to be that, knowing them, it will be the higher end of caravanning and sort of glamping and whatever, but it is, and certainly kind of growing up around Troon, Ayrshire, it is fantastic. It's really fascinating just to see the huge rise in these kind of very luxurious cabins and kind of golf related holidays that are sort of taking on, they are being taken up very quickly, and they're doing very, very well. Again, I don't know if there's any other questions from anybody or any comments. So I suppose, well, just one question: what's the next steps in looking into this?
Happy to take that one.
Yeah,
Chair.
sure.
I think the next steps for this is we like the opportunity, and we've brought it to committee members' attention. The next step is finding out where this actually fits in the portfolio. So we'll need to have a look at the current allocation that we have and determine what needs to move in terms of slices of allocation in order to make this happen. I think, where does it fit? Is it secure income? Is it inflation protection? What characteristics is this providing us in terms of benefits to the fund? So I think we need to have a look at that process first, and then following on from that, decide whether we're going to take this forward or not.
Yeah, that's fine, thanks. I think obviously we're just been asked to note the report, so assuming there's no other questions, I think, are we happy to do that? Okay, thank you very much. Obviously, we've now got left ground rents and then the quarterly update, and also the final decision with regards to consultancy procurement. Are we happy to move into the exempt section of the meeting? I don't know if there's any comment from officers on that.
Chair, happy to move into exempt.
Okay, so I'm just going to, I think we just have to do a formal vote on that. So just to ask the committee members, are we happy to move on to the exempt item of the agenda? That's a yes. And just from officers, what happens now with regards to the recording?